Hello there. I wanted to show you quickly how to use the Business Goal Builder to set interconnected profit, financial, sales, and marketing goals for your business. So you avoid being like these astronauts in the cartoon where they are pulling their business goals out of thin air. So the place to start is in the financial goal section. First thing to do is set your profit goal. So in the field for draws, distributions, and dividends, you'll set a profit goal. In this imaginary scenario, let's say the profit goal is $100,000, right? And then the next thing we want to do is establish what the goals are for the fixed costs and expenses for the business. And in this case, let's start with the owner's salary. Let's say that'll be $100,000. And then retirement planning, let's make up a number, $25,000. And then for the emergency fund, let's say it's been established that the business will contribute, let's say 30,000. And then business taxes for this particular entity, let's say 15,000. Then we'll skip depreciation and amortization. And then the rest of the overhead comes under other fixed costs and expenses. And let's say that is 250,000, right? Okay, and then for debt principal repayment, let's say they're planning to pay 35,000 toward principal for the year. And then any planned business reinvestment would be planned for in this section here. And let's say they want to buy a whole bunch of 3D printers. Okay, so that's going to be 150,000. All right, and they're going to maybe expand, let's see, any other business reinvestment. Maybe they need to invest in upgrading their computer network. All right, so that's $60,000. Okay, so then the total of the financial goals appears at the top here, $765,000. And then what we need to do next is calculate what is the sales goal that needs to be hit in order to be able to service these financial goals. And right now it's looking like the sales goal number and the financial goal number are the same, but that's only because we haven't entered the variable costs and expenses. And the minimum variable costs and expenses would be any credit card fees if your company is accepting credit cards. So I usually put at least 3 to 4% for the credit cards. And then maybe there are other cost of goods sold or direct costs or job costs or even seasonal labor. Let's say that adds up to an additional 10%. So our total variable costs and expenses for this fictitious company are 14%. So this is now calculated that your sales goal is about $890,000 in sales. And if you achieve that sales goal, you'll be able to honor the financial goals of $765,000. Looking further down, we have revenue centers, and a revenue center is a group of associated products and services. So you can have as many revenue centers as you want to add, and under each revenue center, you can add as many products or services as you need to for that particular revenue center. All right, in this case, I've made up these different products. And then what you do is you enter, let me give you an example. Let's go down to the other revenue center. And you enter what percentage of the total company sales will come from this revenue center, in this case, 80%. And then for the products and services, you're going to add what percentage of revenue center sales does this product contribute. So in this case, 100%. Let's change that. We're going to trigger an error in a second. This service is going to be, let's make up a service. This will be just making up a name, waste disposal. Okay. All right. So then this revenue center, let's say it's going to be 20%. Right now, this needs to change up here to 80%. And we have to add a price for this. Actually, let me leave that 100, so I'll generate an error. Let's enter a price for this. Let's make it $50. Okay, now we generated that error because all of the products and services within a revenue center need to add up to be 100%. And right now, because I put this at 20% and I left this at 100, we have 120%. So I need to change this, adjust this. Let's change it to 80. All right, and that'll make the error go away. All right, so now we've added products to our revenue center. The final thing we need to do is set our marketing goals. So if we go back up to the top, you'll see the marketing goals listed at the top here. And these are for marketing qualified leads. So how we arrive at that is we go to the individual products and we put an estimated buying conversion rate. And let's go to the product that we added just now. And let's see, waste disposal. Let's put a percentage. Let's call it 5%. So the idea here is that of all the leads that are coming into the company that are qualified, 5% are converting into this waste disposal service. All right, so once you've entered the buying conversion rates for each product in each revenue center, then the business goal builder will calculate, going to the top, the marketing qualified leads you need for each revenue center, as well as for the business overall. So now, this is how you set your business goals, and then the next step is then to adjust what the financial sales and marketing goals are based on your knowledge of the business, based on what is reasonable to expect from the business and what your resources are. Once these business goals are set, you can, of course, edit them. You could clone this and create another version off of this set, or you could start brand new and create a brand new scenario of business goals. Once you're satisfied with setting the business goals, then the next thing to do is avoid becoming a platinum card-carrying member of the Business Goal Set It Forget It Club. And so what you want to do to avoid doing that is to track your progress toward those goals. And we actually do that in the Goal Progress Tracker, which I'll demonstrate in the next video.